Dear fellow investor, it all started 34 years ago in a small town more than 800 miles away from Wall Street. They told me I was a fool. They said it's just not how things are done. They said it would never work. Yet here we are, more than 34 years later, and it's going better than ever. I'm not talking about beating Wall Street, their army of high-paid analysts, and legions of smooth-talking brokers. I'm talking about destroying them. In the next few moments, you're going to learn all about how we've found opportunities to find big gainers in the stock market. When I say big, I mean big. Like gains of 2,467%, 3,002%, and as much as 5,141%. Think about that. A 5,141% gain is a veritable life-changing percentage. It would have turned $1,000 into $51,410. A $5,000 investment into $257,050. Or a $20,000 investment into more than $1 million. Now that's big. And that's just a few of them. There are dozens and dozens more just like them. Now you can start finding them too, right along with me. Let me start at the beginning though. My name is Bill Matthews. More than 34 years ago, I founded The Cheap Investor, an investment newsletter for regular investors. I'm based in a small suburban town about an hour outside of Chicago. Simply put, I'm nowhere near Wall Street. And my performance is nowhere near theirs either. It's 10 times better. Consider this. In the last 6 years, I've made 326 recommendations to readers of The Cheap Investor. Together, they posted average gains of 192% after they were recommended. 157 of them went up more than 100%. 89 of them went up more than 200%. 29 increased more than 500%. And 4 went up well over 1,000%. These types of gains sound unbelievable. I know, most investors are lucky to hit 1 or 2 doubles in their time. But they are absolutely true. And it's all thanks to the Cheap Investor system, which has been honed over the last 34 years. It's no secret, most investors lose money. Historical research indicates that 70% of all investors lose money in the stock market. They do so for a number of reasons. They let their emotions get the best of them. They buy hot stocks that are popular. They follow Wall Street's advice, or any dozens of reasons that prevent them from making a fortune in stocks. That's why I've developed the Cheap Investor system. It takes all the guesswork out of investing. And after it sorts through the 10,000 or so stocks on the markets every month, it leaves only the true gems behind. Those are the ones we feature each month to Cheap Investor subscribers. Here's how it works. At The Cheap Investor, we have developed a number of ways to find big winners regardless of what the markets are doing. It's truly unique. And as you learn about it today, you're going to see the results are uniquely spectacular. You see, not only do we not follow Wall Street, oftentimes we find ourselves doing the exact opposite of what they recommend. Take this first example where we turned a big loser for Wall Street into a 541% gain in just a few months' time. It's the classic setup we find at The Cheap Investor. You have a company with great products, great brands, and facing some temporary tough times. Wall Street had no patience for it. They couldn't sell the stock fast enough, and they drove its shares down 95% in the process. But we did have the patience, and it was well worth the wait. Here's what I told Cheap Investors back in January 2012. Fitness equipment maker Nautilus was a high flyer, selling at $17.23 in February 2007. Now that the stock has fallen 95% from that level, we think it's time to take a look at this interesting company. In the past, we've been very successful recommending low-priced companies that have name recognition. Nautilus brands include Nautilus, Bowflex, Schwinn, and Universal are well-respected names in the fitness industry. We think the stock has the potential to move at least 50 to 100% over the next year. Nautilus shares were trading for $1.54 when the cheap investor recommended it. In March of this year, Nautilus hit a high of $15.80. The total maximum gain cheap investor subscribers could have scored was 925%. That was a great one for sure, but it's nowhere close to our best. The cheap investor system finds these kinds of situations with alarming regularity. One of our longtime favorite biotech stocks is Arena Pharmaceuticals. The company is developing an anti-obesity drug. It has had its ups and downs over the years with the FDA approval process. As a result, the stock has moved like a yo-yo over the years. It would swing up 300% in 6 months, then down 60% in a few weeks. No question, it was a volatile stock. But volatility isn't always bad, especially if you're a cheap investor member. In this case, we watched the stock drop after the FDA rejected its drug. It fell more. We waited. It fell still more. We waited some more. But after shares were down well over 80% and it was cheap enough, we made our move. We wrote in the December 2011 issue of The Cheap Investor, Arena Pharmaceuticals has been a profitable investment for our subscribers in the past. Recently, it's been trading between $1.30 and $1.40, so we think it's time to take another look at this stock. I'm glad we did look at it there. The month we recommended Arena, the stock had fallen from as high as $8 per share to a new low of $1.37. The stock was the cheapest it had been in a long time. Practically no one wanted the stock except for the cheap investor. And as with most cheap stocks, it paid off well. A little more than 6 months later, Arena shares hit a high of $13.50. Cheap investor subscribers could have scored a potential maximum gain of 878% from a biotech company that was rejected. That's the beauty of the cheap investor system. It doesn't matter what other people think of the stock or how you feel it'll do. The system eliminates all that and looks at fundamental criteria to give a much more scientific projection for the cheap stocks it uncovers. That's how we book big gains even from widely followed stocks. Again, we find ourselves picking a stock that's fallen out of favor. But this time, it's not an out-of-the-way small-cap stock that most investors have never heard of. It was Groupon, the hottest initial public offering of 2011, backed by all the major investment banks. Of course, as with most hot IPOs touted by Wall Street, the stock shot up and then plunged. A disaster. Shares fell from as high as $30 to less than $3 in a year. But that's when the cheap investor picked up on a big opportunity. In the December 2012 issue of The Cheap Investor, I detailed the situation. On November 9, Groupon plunged 30% in reaction to third quarter financial results. What's strange is the results were significantly better than they were a year ago when the stock was over $30 per share. We think smart investors should start accumulating the stock at this attractive level. If Groupon continues its growth trend, it has the potential to at least double over the next year or two. The trend we saw forming definitely continued. By the following summer, Groupon proved it was growing strongly. Shares jumped to a new high of more than $12 per share. That's up 340% from the cheap investor's recommended price of less than $3 per share in 9 months. And it's another great example of the benefits and profitability of cheap investing. But there are many, many more just like it. The cheap investor has a remarkable track record. In fact, each stock featured in the cheap investor in the past 6 years went up an average of 192%. And each year just keeps getting better and better. In 2010, every one of our 62 stock picks were winners. Our subscribers received an average of 5 winning stock recommendations each month. In 2011, our subscribers received 33 stock picks that vaulted over 50%, and Arena Pharmaceuticals alone climbed an eye-popping 878%. In 2012, 30 of our stock recommendations gained 100% or more. In 2013, 29 of our stock recommendations gained 50% or more, including 20 that soared well over 100%. In 2014, 11 of our stock recommendations gained over 50%. This is why The Cheap Investor was rated the #1 investment newsletter by Select Information Exchange out of more than 300 different investment newsletters. That's all great, but it's not what really makes The Cheap Investor an invaluable tool for readers like you. The true test of any investment advisory service is how well the readers do with it. Just ask our readers how well we're doing for them. Here are a few notes some readers of The Cheap Investor have sent in. Gary S. said, "Paid for itself in one trade. I invested $3,300 in one of the recommended stocks, and it's gained enough to cover 5 years of memberships." Pat D. said, "Already paying off. Wow, I love the service." John D. said, "Missed opportunity. I purchased a biotech stock on your recommendation and sold too early. I missed the pop. You have given good tips. I will continue to follow your recommendations." Stan D. said, "In a word, great. I think it is a great service." Robert W. said, "What a difference being different can make. Bill's tact is certainly different than most, and his track record speaks for itself. I like Bill's philosophy and look forward to years of mutual profits." Those are just a few of the notes I've received recently. With the Cheap Investor track record built up over more than 34 years, there are many, many more just like them. Clearly, the Cheap Investor has a lot to offer investors fed up with Wall Street and trying to make it on their own. Great research, great recommendations, satisfied readers, and more. Now to the good part. If you sign up for the Cheap Investor today, I'm going to give you $200 off the Cheap Investor's regular price of $397 a year. Sound like a good deal? Well, it is, but it gets even better. Not only will you be getting $200 off the Cheap Investor, you're going to get everything you need to make the Cheap Investor a partner in reaching your financial goals. These benefits you'll receive right away by signing up include my book, Making Big Money in Small Stocks. Research Report Number 1, Top 5 Stocks to Ride the Biotech Bull. Research Report Number 2, 5 Deep Value Stocks for 2015 and Beyond. Special Guide Number 1, How to Make the Most of the Cheap Investor. Special Guide Number 2, Get Rich in Small Stocks. The final thing is my personal guarantee. It's not something I take lightly. It's very important to me and eliminates virtually all of your risk in learning what hundreds of other investors like you find so valuable and giving the Cheap Investor a try. You see, I realize the Cheap Investor is not for everyone. The opportunities we uncover are not normally the large cap stocks covered by Wall Street analysts, and you probably won't hear them talked about in the financial media. We focus primarily on small cap stocks that are largely unnoticed by the investing herd. But if you are someone who wants the types of gains only small cap stocks can offer, then the Cheap Investor may be right for you. As a result, I will give all new readers a chance to test drive the service at no risk to you. You may cancel at any time within 60 days if you are not absolutely satisfied, and we'll promptly refund 100% of your subscription fee. Just let my customer service team know within the 60-day window, and we'll take care of you. You have nothing to lose. Get your $200 off right now. Click the Join Now link below, and let's get started. One last thing. Again, this is the first time we've ever given $200 off the Cheap Investor. I'd recommend taking advantage of it now, and it can all be in your hands in less than 3 minutes. The recommendations, the research, the system, the tricks of the trade I've picked up over the past 34 years publishing The Cheap Investor, and more. Get your $200 off right now. Click the Join Now link below and let's get started.